DavidMRubenstein, How to Invest, Masters on the Craft. Welcome to the summary of How to Invest, Masters on the Craft by DavidMRubenstein. This book provides insights from some of the most successful investors in various fields, such as real estate, venture capital, and hedge funds. Through their experiences and valuable lessons, the book explores key topics like the impact of technology on investing, the role of patience in managing portfolios, and the importance of recognizing market anomalies. You'll gain a deeper understanding of the strategies and mindsets employed by these investing maestros, helping you further develop your own investing expertise.
Building BlackRock. Larry Fink's success story with BlackRock, a company that now manages more than $9.6 trillion in assets, shows that wealth wasn't his primary focus. Fink started BlackRock after feeling disillusioned as a trader at First Boston after his trading group hit a rough patch, causing the company to lose $100 million. Instead of being supported, they were scapegoated. So he decided to build his own viable firm with an ambition to improve the industry. BlackRock's rise to success mainly stems from the growth of its iShares exchange-traded funds. In 2009, Fink purchased Barclays Global Investors and its iShares ETF unit. At the time, iShares held client assets totaling $340 billion, but by 2022, that number increased to $3 trillion. However, Fink believes there is still room to grow as BlackRock holds less than 2% of all global assets while banks can hold up to 10% to 12% of all deposits in a given state. The triumphs of real estate mogul John Gray. John Gray, the president and COO of Blackstone, played a key role in the acquisition of equity office properties portfolio for $39 billion. Gray's shrewd strategy involved flipping less promising office buildings to protect the company from downside risk. The purchase of Hilton Hotels also yielded a profit of $14 billion. Gray believes the current real estate market does not pose the same risk as the Great Recession, as the post-COVID economy has neither loose lending nor overbuilding. With moderate leverage and tight supply of properties, values remain under control, and inflationary pressures create a tailwind for real estate investors. Sam Zell, from small beginnings to real estate tycoon. Sam Zell is a legendary real estate investor who sold his office buildings portfolio for $39 billion. He started with a small investment of $19,500 after attending the University of Michigan Law School. Zell knew he could make money in real estate by leveraging mortgages, which don't come with personal recourse for the investor. In 1981, he diversified half of his portfolio into other asset classes, such as logistics, healthcare, manufacturing, and agriculture. Zell's strategy in turning around troubled companies earned him the nickname Grave Dancer in the 1990s. Although he admits to making mistakes, he expects to be right about 60 to 70% of the time. Zell bought a newspaper company that included the Chicago Tribune, expecting revenues to shrink by 6% per year. Instead they plummeted 30%, causing his investment assumptions to fail. However, Zell remains undeterred by failures and expects to be wrong about 1/3 of the time. The art of growing an endowment. Sarah Voland's success story at Bowdoin College is a testament to her expertise in asset allocation and manager selection. When Voland took charge of the college's investment portfolio, it was worth $465 million. However, by the time she left in 2021, the endowment had grown to $2.7 billion, surpassing many other university endowments. She achieved this by avoiding fixed-income investments and cash, and by venturing into private equity and venture capital. Voland was meticulous with her asset allocation strategy, favoring equities and building a farm team of promising managers. Additionally, she was not afraid to stand by managers who experienced difficult periods. Voland's strong communication and understanding of the portfolios she invested in enabled her to find success in private real estate and venture capital, even when they had little exposure in these areas previously. Her journey provides us with invaluable insights into effective portfolio management and growth. The genius behind Medallion. Meet Jim Simons, the founder of Renaissance Technologies and the mastermind behind the incredible success of the Medallion Fund. With a doctorate in mathematics, Simons believed in computers' superior ability to make investment decisions and surrounded himself with mathematicians, scientists, physicists, and astronomers to develop new trading strategies. His dedication to finding market anomalies proved to be the key to Medallion's astounding returns of over 40% for more than 3 decades. Simons eventually closed the fund to outsiders, fearing its size would hinder its nimbleness, and continued to make brilliant trades with his extraordinary mathematical skills. Paulson's hedge fund success. John Paulson's hedge fund, Paulson and Company, managed $6 billion by the mid-2000s. Paulson's success in shorting bonds issued by financial companies in the 1980s led him to bet against the overvalued housing market in 2005. His firm successfully profited by shorting mortgage-backed securities, primarily the BBB-rated tranches of securities backed by subprime mortgages. Paulson's use of credit default swaps allowed for short sales, and his investors saw profits of over $20 billion. Paulson advises against cryptocurrencies but is a proponent of gold and homeownership. Thoma Bravo's secret sauce. Orlando Bravo's buyout firm, Thoma Bravo, has become successful due to their unique approach of seeking out software companies that could benefit from more professional management and disciplined decision-making but keeping the existing management team in place. By emphasizing improving business processes and combining a deep analytical approach to business problems with a deep understanding of people and how to inspire them, Bravo has raised over $22 billion in 3 new funds and routinely resells software companies for 3 to 4 times his investment. In one instance, he resold a portfolio company for 17 times his initial purchase price. The future of tech investment. Mark Andreessen, co-founder of Andreessen Horowitz, notes that venture capitalists now see closer to a 50-50 ratio of winners to losers with potential hundredfold returns. The pandemic has changed the dynamic of tech hubs, proving that distributed workforces can be effective, leading to Miami potentially becoming a leading tech hub, alongside Silicon Valley moving into its computing cloud. Andreessen Horowitz invests in cryptocurrency and biotech, seeing both as technological breakthroughs. Mike Novogratz and the power of young crypto investors. Mike Novogratz, founder and CEO of Galaxy Digital, is a well-known supporter of Bitcoin and other cryptocurrencies. Novogratz recognized the power of a currency controlled through a peer-to-peer system rather than issued by a central bank or treasury after buying Bitcoins on a whim in 2013. Bitcoin is becoming increasingly popular, especially among young people who are disillusioned with the way boomers are running the economy, which has intensified wealth inequality. While mainstream financial leaders like Jamie Dimon dismiss digital currencies, younger investors view the concept as a referendum on old ways. Around 60 million Americans own some amount of cryptocurrency, creating a powerful voting bloc and preventing federal authorities from engaging in onerous regulation. Cryptocurrencies continue to appeal to investors looking for protection against the devaluation of fiat money. Meanwhile, Novogratz asserts that Bitcoin mining has an undeserved tarnished reputation for hogging electricity. In truth, Christmas lights and YouTube videos consume more energy than Bitcoin mining does.
In conclusion, How to Invest, Masters on the Craft, offers a wealth of wisdom and knowledge from seasoned investors across different fields. The book highlights the significance of strategic asset allocation, understanding market dynamics, and identifying potential investment opportunities often overlooked by others. It emphasizes the importance of surrounding oneself with talented professionals, nurturing healthy working relationships with peers, and maintaining an appetite for innovation. Through captivating stories of these successful investors, the book provides a comprehensive guide to hone your skills and improve your acumen in investing.